So the latest data coming out of Texas is painting a really surprising picture, isn't it?
Yeah, it really is.
For years, we've seen it as the growth engine, the place everyone's flopping to.
Hmm.
But now there are these whispers, some people even calling it an absolute free fall in the housing market,
Right.
leading to this unexpected exodus of people. Is that really what's happening on the ground?
Well, it definitely sounds counterintuitive, doesn't it? Texas has been like synonymous with growth for so long.
Exactly.
So this kind of narrative shift is genuinely striking. But yeah, when you dig into the deeper numbers, they do reveal a pretty significant rebalancing going on.
Wow, that's a powerful counter narrative to what we've been hearing for, well, years.
It is.
So, okay, this deep dive then is all about pulling back the curtain on precisely what's going on in the Texas housing market.
Yeah, let's get into it.
We're going to unpack why people are now maybe choosing to leave,
Mhm.
what this means for home prices, for rents across the state,
Mm.
and maybe surprisingly, whether this whole perceived crisis could actually be, really good news for a lot of people out there.
Yeah, we'll definitely drill down into specific cities, try to connect the dots on the underlying economic shifts happening,
Okay.
and explain how this pretty dramatic reversal came about. Yeah. It's not just a numbers story. It's a really fascinating look at the sustainability of that kind of rapid growth.
Right. So let's start with that foundational shift you mentioned, domestic migration into Texas. The numbers here are apparently pretty startling.
They really are.
What do they tell us? How many people are actually moving into Texas now?
Well, the most recent data shows that domestic migration in Texas has plummeted. We're talking about 65% down over just the last 2 years.
65%. Wow.
Yeah. And to put that in perspective, it's one of the lowest levels we've seen in like 2 decades.
That's incredible for a state that was just adding hundreds of thousands of people year after year.
Exactly. That inflow has just drastically slowed down.
And the direct consequence of that, of fewer people moving in, that's what we're seeing with housing inventory, right?
Precisely. Fewer buyers, more houses sitting.
So what's that picture looking like? How bad is the inventory situation?
It's a massive spike. As of May 2025, there were 132,000 resale listings on the market across Texas.
Okay. 132,000. How does that compare to normal?
Well, the long-term average for May is usually around 84,000 listings.
So carry the one. That's like 55% more inventory than usual.
Got it. About 55% more homes looking for buyers right now. That is a staggering amount.
Which obviously translates into a real challenge for sellers. We're hearing stories, anecdotes about houses just sitting there.
Yeah, for a long time. Many houses are now taking over a year to sell.
Over a year.
Mm-hmm. And it's not just about waiting. It forces sellers to make really substantial price cuts, often, multiple times, just to get an offer and move the property.
That's such a dramatic shift from the bidding wars and weekend sales we saw just a couple of years back.
Total night and day difference.
And you can see that impact directly in the price data for some of the big cities, I assume. What are the latest numbers telling us for, say, Dallas and Austin?
Definitely. In Dallas, values went down 0.56%, just month over month in April.
Okay, 0.5% in a month.
Right. And if you annualize that, it comes out to almost a 7% drop over a year, potentially.
Almost 7%. And Austin, it's been hit harder, I hear.
Yeah, Austin saw values down 0.63%, 0.63% month over month. So annualizing that gets you closer to a 7.4% drop.
A 7.5% annual drop in prices. That sounds incredibly significant. How does that kind of decline stack up against, historical downturns?
Oh, it's very significant.
What kind of long-term correction could we even be looking at if this keeps up?
Well, historically, housing downturns tend to last, 4 to 5 years. It's not usually a quick thing.
Right.
So if prices were to keep dropping at, say, 7% a year for 4 years, you could easily be looking at a potential 30% correction in values from the peak.
40%. Wow. Okay, so this creates this real split outcome, doesn't it?
Yeah, definitely.
On one hand, for people wanting to buy, or maybe renters, this could be fantastic news. Finally, some affordability coming back.
Absolutely. Much needed relief for them.
But if you're someone who bought your house in Texas near that pandemic peak, what does this mean for them?
Yeah, for those folks who bought at the peak, it means watching their equity just erode. It's a concerning situation, especially if they bought with little down payment or if they suddenly need to sell in the near future.
Right.
It really underscores how, what's good news for one part of the market can be really tough for another.
Okay, so considering all this dramatic data, the migration plummeting, prices dropping, what's really driving this unexpected exodus from Texas? I mean, for so long, it was the ultimate boom state, right?
hmm
Infinite growth potential. What changed?
The number one reason, when you boil it down, is actually pretty straightforward.
Okay.
Texas lost its affordability advantage. Plain and simple. Before the pandemic, it really was an affordable place to live, buy a home, rent an apartment, especially if you compared it to the coast.
Sure.
But as those prices just soared, many local Texans, they simply cannot afford the current home prices or the rents anymore.
Right.
This loss of affordability is like literally forcing people to rethink things and, in a lot of cases, to pack up and leave.
And where are they going? You mentioned people are leaving Texas now for neighboring states, which seems kind of backwards from the old narrative.
Yeah, it does. But we're seeing definite migration flows into states like Oklahoma.
Oklahoma.
Yep. The typical home value there is around $215,000. That's roughly 30% cheaper than the typical Texas home right now.
30% cheaper. Wow. Any others?
Arkansas is very similar.
Yeah.
Typical home value around $217,000, so again, about 30% cheaper.
Okay.
Even Louisiana, with a typical home value around $208,000, is becoming a more attractive option for people really hunting for lower living costs.
And I assume the migration data backs this up. Are those states actually growing faster than Texas now?
The numbers absolutely support it. Oklahoma's domestic migration rate is showing 0.3% growth in 2024. Arkansas is at 0.4% growth.
Okay.
Both of those are higher than Texas's rate, which is currently only 0.2%.
Only 0.2%. That's a huge slowdown.
Huge. And if you look a bit further east, states like Tennessee and Alabama are also growing significantly faster than Texas now. It's a complete flip-flop from just a few years ago.
So it's not just local Texans being priced out, though, is it? Because we saw that huge wave of people moving into Texas during the pandemic, especially from places like California and New York.
All right, that's a huge piece of this slowdown puzzle.
What's happening with that flow now? Has it just stopped?
That massive influx from California and New York, during the peak pandemic years, that initially drove up Texas home values and rents like crazy.
Yeah, we all saw that.
But now that inbound migration has significantly slowed down, it seems the appeal of Texas has, well, faded for many of those potential movers.
Okay, so if that influx has slowed, what about the people who did move there during the pandemic, especially maybe from California? Are they sticking around or are they leaving too?
Well, many of those who moved from California, for instance, apparently ended up feeling pretty fed up living in Texas.
Fed up? Why?
Anecdotally, you hear things. Some found the summer heat way more intense than they expected.
Okay, I can see that.
But maybe more critically, the property taxes.
Ah, the property taxes.
Yeah, and the utility bills too. While maybe the house price seemed lower initially, those ongoing costs ended up being a lot higher than many anticipated in the long run.
Gotcha.
So, yeah, significant number of those who moved in are now actually moving back to California or maybe to other Southwest states that offer a different kind of balance between lifestyle and cost.
Interesting. Okay, let's use Austin as a sort of case study here because its correction seems particularly sharp. What have the changes looked like there recently?
Austin really is the poster child for this peak and correction cycle. Home values there are down over 20% over just the last 2.5 years.
20%? Wow. Can you put that into dollar figures?
Yeah, so Austin's typical home value peaked during the pandemic craziness at about $578,000.
Okay.
Today, that typical value is down to $457,000.
That's a massive drop, over $120,000.
Huge drop. And it's not just homes. Rents are also down almost 20% in Austin over that same period.
So if you look at those current values, like $457K, where does that put Austin in a sort of historical context?
Basically, Austin's current home values are back to where they were in June 2021.
June 2021. So it's like hitting rewind 3 years on the market there.
Pretty much all that insane appreciation that happened. For now, anyway, it's been wiped out.
And when you analyze that from an affordability angle, looking at maybe the home value to income ratio, what's Austin telling us now? Is it getting close to normal?
That's a key metric. When you look at the home value to income ratio in Austin, right now it sits at 4.49.
Okay, 4.49. What's the long-term average?
The long-term average for Austin is more like 4.19.
Okay, so still a bit elevated.
So a bit elevated, yeah. But this suggests that Austin could become, quote-unquote, fairly valued in terms of its housing market within maybe the next 6 months or so, if prices keep dropping at this rate.
Right, and the median income there is?
Median household income in Austin is about $102,000 a year. So this continued drop is really essential for bringing genuine affordability back for those local residents.
Okay, but it sounds like from the data, the Texas market isn't just one single story, right? You use the word bifurcated. Can you explain what that means for different regions?
That's exactly right. The Texas housing market is truly bifurcated. It's definitely not monolithic. You're seeing very different trends in different areas, even though inventory has exploded almost everywhere.
But the price drops aren't hitting equally.
No, not at all. Price declines are not evenly distributed.
So while Austin's facing this dramatic, 21% correction, what about other big cities like Dallas or Houston? Are they seeing the same thing?
Not to the same extent, no. While Austin saw that big 21% value drop over 2.5 years, Dallas has only seen about a 3% drop in that same time frame.
Only 3%.
And Houston's values have actually been relatively flat over that period. Now, San Antonio has seen significant drops, more like Austin, but yet other major cities haven't been hit nearly as hard yet. We are, however, just starting to see a slowdown appear in Houston now, too. Inventory is definitely on the rise there.
Okay, so Houston might be next. What about the smaller metros in Texas? Are they following the big city trend, or are they doing their own thing?
Interestingly, some of the smaller Texas metros have actually continued to see value increases over the last couple of years.
Increases? Really? Like where?
Yeah, places like Tyler up 10%, Longview is up about 7.6%, San Angelo up 5%, even Midland Odessa, tied to oil, is up 10%.
Huh. So they're bucking the trend.
For now, but it's generally not expected that this outperformance in those smaller markets will last as the broader economic tides turn.
Right. Speaking of those broader economic tides, it feels like there's this growing fear that Texas's whole economy might be heading into a major slowdown. What's driving that concern? Is it connected to the oil industry?
That's a critical point, yeah. The underlying economic currents do suggest a slowdown is starting, and it's heavily related to what's happening with oil.
Okay, walk us through that connection. What's happening with oil prices, and how does that ripple through the Texas economy?
Well, oil prices have dropped quite a bit. West Texas Intermediate Crude, WTI, is currently around $68 a barrel.
Okay. Down from
a peak of $120 a barrel during the pandemic highs.
Wow, big drop.
Yeah. Now, here's the slightly counterintuitive thing. High oil and gas prices are generally bad for the overall U.S. economy, right? People pay more at the pump, costs go up.
Right, hurts consumers.
But they're actually incredibly good for the Texas economy.
Because Texas produces so much of it.
Exactly. Texas is where the vast majority of oil in the continental U.S. is produced. So higher prices mean more profits for Texas oil companies, usually higher wages, higher incomes for residents, and that typically gives a big boost to the Texas housing market.
Okay, so the reverse must also be true then. If prices are down like they are now, around $68, that's bad news for Texas.
It puts a damper on things for sure.
And what about things like the Baker Hughes rig count? That's a key indicator for oil activity, right? What's that showing?
It tells a very clear story, and it's not a great one for Texas right now. The rig count shows a significant drop. Back in 2022, there were 782 operating oil rigs in the U.S.
Okay.
That number has fallen all the way down to 559 recently.
Wow.
And Texas is leading that decline in active rig counts. When you see active rigs going down, it signals less investment, less drilling, less employment in the oil sector, which is generally not a good sign for the state's economy.
So pulling all these threads together, the migration drop, inventory spike, price cuts, the oil situation, what's your overall take on the Texas market's current state?
It really seems like Texas entered a big bubble during the pandemic.
Fair.
It was fueled by those super low interest rates, the massive migration wave, and that booming oil sector at the time.
Right.
And what we're seeing now feels very much like the beginning stages of that bubble deflating, maybe even crashing.
A crash.
Well, whether you see this as a positive or a negative thing really depends on where you sit, right?
Yeah.
If you already own a house there and we're maybe planning to sell soon, you might not like it much. But if you've been waiting on the sidelines looking to buy, it's a completely different story. Opportunity knocks.
Let's talk about that affordability equation then, and maybe when the market might stabilize. It's kind of hard to imagine now, but if we go back, say, to 2005, what did the typical Texas home cost back then? What did a mortgage payment look like?
Oh, it was a totally different world. In 2005, the typical Texas home value was only about $135,000.
$135K. Wow.
Yeah. And for many years, really from maybe 2000 up to around 2015, buying in Texas was an incredible bargain. Your mortgage payment, including property taxes and insurance, could easily be as low as $800 a month.
$800 a month. Okay.
Very affordable for a long time.
But then during the pandemic peak, those payments just soared, didn't they?
Oh, yeah. That same mortgage payment soared up to like $2,300 a month at the peak.
From 800 to 2300.
Huge jump. And while it's come down a little bit since the absolute peak, the cost of buying a house in Texas is still at a level we've just never seen before in its history, especially when you compare it to local incomes.
So what's the challenge now? How much income are people spending on housing?
Today, for a typical local buyer, getting a mortgage in Texas means spending about 33% of their gross income just on that payment.
33%. And what was that long-term average you mentioned?
The long-term average going back decades was much closer to 24%.
Okay, so 24% is kind of the historical norm.
That seems to be the sustainable level for Texas. So the thinking is the Texas housing market will likely stabilize when that mortgage payment as a percentage of income gets back down closer to that 24% average.
That's the key threshold to watch then.
Exactly. Until it gets there, we probably expect to see more price drops.
And you have some specific forecasts for price drops over the next year. What are those looking like for the big cities?
We do. For Dallas, the forecast is for prices to drop another 7% over the next 12 months,
Okay.
which would bring the current typical value of $379K down to around $352Ks.
And Austin, still falling faster.
Yeah, Austin's expected to drop another 7.6% over the next 12 months. If that happens, it could bring the total correction in Austin from its peak to about 30%.
30% total correction. Wow. What about San Antonio?
San Antonio is expected to drop about 6.7% over the next year. That would bring its total correction to somewhere around 13 to 14% from its peak.
Okay. And while we're throwing around these big citywide numbers, it's probably important to remember that things vary a lot, block by block, zip code by zip code, right?
Oh, absolutely.
You mentioned bluer and redder areas earlier. Can you clarify what you mean by that in this housing context? It's not political, right?
No, definitely not political. When we talk about bluer areas in this context, we generally mean more urbanized regions, often places tied to industries that saw those huge remote work influxes during the pandemic, like tech hubs.
Like Austin.
Exactly, like Austin. These areas saw some of the biggest price run-ups, and now they're seeing the most significant corrections.
Okay. And redder areas.
Conversely, redder areas might be less dependent on that specific pandemic-driven growth. They could be more suburban, exurban, maybe tied to more traditional industries. Those areas have often seen more stable values or even some continued increases, as we saw in some smaller metros.
Gotcha. So different economic drivers playing out differently on the ground.
Precisely. And we also see some counties that are now considered maybe undervalued based on local incomes, while others definitely remain overvalued. It's very localized.
So at the end of the day, what's your take on what this whole rebalancing act means for Texas's long-term future? Is this ultimately good or bad for the state?
You know, overall, the increased affordability that's coming back to cities like Austin, Dallas, San Antonio, and eventually Houston, that's ultimately a positive thing for the state's future growth.
Makes sense.
I mean, Texas is the second biggest state in America, right?
So-
Over 30 million people. This renewed affordability, even if it's painful for some right now, will allow it to continue attracting people and growing sustainably into the future. It's probably a necessary correction for long-term health.
So what we've really unpacked here is that what looks like a crisis for some in the Texas housing market, it's actually this massive rebalancing act for others.
Yeah, that's a good way to put it.
Actively bringing back that much needed affordability. And the market is clearly not, one single thing. Different areas seeing very different impacts.
Definitely.
And some regions might actually be heading towards stabilization, maybe even becoming pretty good buying opportunities fairly soon.
It seems that way. And, this dramatic shift in a huge state like Texas really makes you think, how might this reshape domestic migration patterns across the whole country?
Yeah, that's a big question.
It's not just about who's chasing affordability anymore. It raises this important question about the very idea of what makes a boom state sustainable in the long run.
Right. What are the real forces driving population shifts and economic growth?
Exactly. And what does this Texas story mean for the future of growth and development in other fast-expanding regions across the U.S.?
Yeah. So it's definitely something we need to give a very close eye on going forward.